A lot of investors will wait until the fourth quarter before they do a Roth conversion. They do this because they typically have a better idea of their income by that point in the year and better understand the tax implications of the conversion. Many people will also choose to pay the taxes on that Roth conversion in cash instead of simply having the taxes withheld by the IRS. Why? Because it's the mathematically correct thing to do. It allows you to get 100% of the converted dollars into your tax-free account. When you pay the taxes on your Roth conversion out of cash in the fourth quarter, however, the IRS expects you to have paid taxes on that Roth conversion evenly throughout the year. And if you didn't pay quarterly taxes on that income evenly throughout the year, the IRS can charge you an underpayment penalty. You see, even though you did the conversion in the fourth quarter, the IRS just assumes you experienced that income all throughout the year. Now, if you have the tax withheld from your Roth conversion, then you don't have to worry about any underpayment penalties. Why? Because the IRS construes any withheld taxes as having been paid evenly throughout the year. Now, you may have heard that the IRS's safe harbor rules can spare you from any underpayment penalty for a fourth quarter Roth conversion. While this can be true in some circumstances, certain requirements do need to be met. Let's talk about the first scenario in which the safe harbor rules would apply. If you pay at least 90% of your current year's total tax liability through estimated quarterly payments or withholdings, then you wouldn't have a penalty. For example, let's say your estimated total tax liability for 2025 after your Roth conversion and other income is $30,000. To meet the safe harbor under this rule, your total tax payments through withholdings or estimated quarterly payments would need to have been at least $27,000. The key here is that those payments have to have been made either through withholdings or by estimated tax payment by the appropriate quarterly deadline. Okay, now let's talk about the second scenario in which safe harbor rules would prevent you from receiving an underpayment penalty. If you pay 100% of last year's total tax liability through withholding or estimated tax payments by the appropriate quarterly deadlines in the current year, you would not have any underpayment penalties. By the way, that number goes up to 110% if your adjusted gross income in the prior year was over $150,000. The key detail here again is that for the taxes to count towards that 100% or 110% number, they need to have been either withheld or paid as an estimated tax along the way. So what happens if you have not paid enough quarterly estimated payments along the way to cover the tax on your Roth conversion, or you simply decide to pay the tax out of cash and not through withholdings? Don't worry, all is not lost. In that scenario, you'd simply need to file Form 2210, Schedule A1. This would allow you to report the income from your fourth quarter Roth conversion as having been received unevenly throughout the year, i.e. in the fourth quarter. This signals to the IRS that you had a fourth quarter income spike due to the Roth conversion. And so long as you make the tax payment on that Roth conversion by January 15th of the following year, you wouldn't have an underpayment penalty. Now, one key point here, Form 2210 Addendum A1 is not easy to fill out, so you will likely need to consult a tax professional to get this done. In summary, the safe harbor rules are not likely to protect you if you plan on paying the tax on your Roth conversion out of cash in the fourth quarter. Remember, the safe harbor rules only really help if you meet the two thresholds of which I spoke earlier and you had the taxes withheld from your Roth conversion, or you had the foresight to pay the tax on your Roth conversion in equal installments throughout the year. Since most people will not have had the foresight to do that, then Form 2210 Addendum A1 will become your best friend if you're hoping to avoid underpayment penalties on a fourth quarter Roth conversion. I'm David McKnight. Thanks for watching.